Hello, this is Justin Johnston. It's March 13th, Monday, after what a crazy end of the last week. I'm not sure which angle to take this. We got softening of the market in real estate, commercial real estate markets, looking like it's going to maybe be off, especially in office, thanks to all the crazy stuff going on in San Francisco, New York, with millions and millions of office space there. Anyway, I think we're going to see a reset a little bit in that. But what I want to talk about mainly today is our Silicon Valley Bank takeover from the feds. And then, of course, over the weekend, Signature. Old Republic now is like stocks plummeting, even though they've come out and said that they have enough cash to cover the deposits or withdrawals, I guess, if the run on the bank. Very interesting stuff. Really, the market's doing well, right? I mean, it's planning. It's about whether or not they've taken the steps to invest properly. Now, with Silicon Valley Bank, my understanding is during the pandemic, they took huge deposits, that the normal deposits that they had, and I'm not exactly sure why, if that was just some of the tech industry that they've catered to heavily is just skewed, that they had a lot, people were like holding a lot of cash and they were putting the deposits in, and but at the end of the day, here's the point that I wanted to focus on. This always gets me a little nervous when we have when the government steps in, and which they needed to do. They had to do that based on where things were at. They stopped trading on the stock market. Then they, of course, stepped in over the weekend. Signature was taken over. And here's the part that makes me a little nervous. FDIC insures up to $250,000 deposits that are on there for personal. It's not for businesses. It's and I think I understand why they're kind of doing that. I think that they're saying, hey, we got to stop the bleeding. This is a little unique and an issue with where the market's going. I mean, if people start making a rush, a run on the banks is what they call it. We always heard that, and it's always referenced back in the Depression era, when all the banks that did fail. Of course, it's hard to quantify when they say the second largest bank failure, and then, of course, Signature's the third largest bank failure. There's just more deposits, they're bigger. I don't know how it compares to what the actual value of the market is at that time. But again, my concern is immediately they step in and they want to take all the fear and concerns out of the market, that things aren't as bad, that it was because interest rates were rising and they made investments in long-term bonds, that if they had to sell because people were trying to take their withdrawals, then they were going to do so at a loss. So that's where it sits. The FDIC, $250,000 insurance based on those things. Why are they saying that they're going to just cover all the deposits? I mean, that's what we want them to say. But here, okay, so we have inflation. The inflation that we had, I believe 100% came from all the trillions of dollars that were dumped in from the federal government during the pandemic. We overreacted on the pandemic. We now know that not all those issues were correct, that there was things that were withheld, and it just made more panic. We found out during that time that our supply chain is totally messed up, that if we do have any calamity, it's we're reliant on a lot of countries, of other countries, for some of our base products, for some of the base stuff like pharmaceutical compounds for making, chemicals that we need on a daily basis. Anyway, things have just been crazy for the last couple of years, but the market kept going because there was trillions of dollars dumped into it from the federal government, from the Treasury. the central bank, Federal Reserve, don't step in and start to tighten money supply. They're like, no, these things are going okay, even though inflation was taken off. So they start that late. They come in, they get very aggressive, trying to almost chokehold the market down to try to slow things up. In my opinion, what they're doing right now with saying that they're going to guarantee all those funds, I don't disagree with that. I think that's probably a good thing. But what we're talking about is this runaway inflation and why interest rates are climbing the way that they are right now. Damn it, I'm not a genius here, but I can guarantee they're dumping more money in. That's what they're doing, right? They're taking money that is lost through the bank failure, and they're going to step in, and all those businesses are going to be backed 100% so that it doesn't create a bigger problem. I understand that. But just remember, anytime they get involved and they do this, it's going to spike inflation some way or the other, right? I mean, you can't, that is dumping money in the market, no matter how you look at it, you know? I mean, is it a good thing to do? I think a lot of the things that we did were good to help stem what happened during the pandemic and all the other problems. The problem is immediately. I mean, there wasn't even like a half a day delay. Yep, we're covering it. Not that we're looking at it, but again, I know that it probably would have caused a bigger run on the banks. That's what they're talking about. But we don't always know these things. I think we have no other method of controlling this supply of money than through the Federal Reserve. We have high taxes. We've got so many programs and so many things that need to be funded. It's very difficult to watch this happen. If there's any more, what do we know about Wall Street finances, everything that's going to finance commercial real estate as well, is uncertainty. That's what's happening here. Uncertainty is the five-headed dragon that will end up sinking all of these issues. I know that the tech industry, I'm not completely sure why they're struggling, just because interest rates went up a little bit. It seems like there should be more products and services and advancements. That's what we're hearing. I just don't know if people are managing properly moving forward. Having said that, that's all we can do. I think my take in closing today is that we need to get our crap together. We need to manage our households and our businesses and our banking and take control of some of these things, and let these nutcrackers that are in Washington stop dictating what we're doing. We need to start manufacturing here at home in the United States, and I would say North America. We have good trade partners. We need to work that way so that they can continue to buy our products and services, and that America is number one. But we've got to manage. We've got to do things. We've got to live less extravagant, and we've got to have more control of the things that we're doing. And that's it. Stay tuned. We'll talk tomorrow, but I'm sure there'll be some more calamity then. But I'm signing off. And again, this is, please subscribe and like. This is being posted on my Justin Johnston YT is what I call it, for the channel that is more of this type of product. Again, Justin Johnston Show, The Justin Johnston Show, also is the secondary part, but we're not going to upload it there to that. Anything you can respond, comment, or interact with me in any way to let me know your thoughts on this, I would love to hear it. And again, stay tuned. We'll talk to you tomorrow.